Welcome back to our channel. Today, we're diving deep into the financial universe of Colgate-Palmolive, the renowned household and personal care products giant. You won't believe the fascinating insights we've uncovered about this company's performance over the past decade. So grab your calculators and get ready to be amazed. Let's kick things off by crunching some numbers. Colgate-Palmolive's price-to-earnings ratio stands at a staggering 42.53, but don't let that high number fool you. Over the last 5 years, the average PR has been around 24.85. Looking ahead, the forward PR is projected to be 22.06. And speaking of forward-looking numbers, the price-to-earnings-to-growth ratio is at 5.37, indicating an interesting investment prospect but also an overvaluation of the stock. Hold on to your hats, because we've got some impressive returns to discuss. Colgate-Palmolive boasts an astounding return on equity of 628.3%, showcasing its ability to generate profits relative to shareholders' investments. On the flip side, the return on assets stands at 9.3%, underlining its efficient use of assets to generate earnings. Earnings per share is a solid $1.79, and the projection for the next 5 years suggests a growth rate of 7.93%, which means that in 2028 the EPS will be 2.63. Not bad, but it is too low yet. Now, let's talk about dividends. With a current dividend yield of 2.52% and a PER 3.87% dividend growth over the last decade, Colgate-Palmolive is not just about financial gains, but also rewarding its investors. The most impressive information about Colgate when we talk about dividends is that it is considered a dividend king with consecutive dividend payments and growth of 59 years. But can this still hold up? The current payout rate is 105.1%, which means that it is paying out more dividends than its net profits, and this adds more debt to its already huge debt. Zooming into the operations, the operating margin is a healthy 14.8%. Showcasing the company's ability to manage costs efficiently. Meanwhile, the profit margin rests at 8%, indicating its ability to convert revenue into profit effectively. Over the past 10 years, Colgate-Palmolive saw an intriguing shift in its revenue trajectory. After a declining phase until 2019, the company rebounded with a growing revenue trend. However, earnings remained relatively stable around $2 billion until a recent dip to $1.7 billion. The debt-to-equity ratio is at 50.51, reflecting the company's financing structure. Long-term debt-to-equity also stands at the same value. This is a point of great risk to take into account when you decide to invest in Colgate-Palmolive. Now, let's talk about the stock's performance. Colgate-Palmolive experienced a minus 5.72% average price return over the last 52 weeks. While its total return over the last 5 years compared to the S&P 500 has been lower due to its steady revenue and earnings. The company's market cap is a staggering $63.04 billion, underscoring its significant market presence. Analysts have weighed in, predicting an 11.15% increase in the stock price over the next 12 months. From the current $76.26 to $84.76. But hold on, our analysis suggests a fair value of $71.30, indicating a slight overvaluation given the current price, which agrees more with the P/G ratios seen above. And there you have it, folks. A whirlwind tour of Colgate-Palmolive's financial landscape. From impressive returns and dividend growth to the evolution of revenue and earnings, this company's journey is nothing short of captivating. As always, remember to do your own research before making any investment decisions. Don't forget to hit that like button, subscribe for more financial insights, and we'll catch you in the next video. Happy investing!